Excellent. How you
Hey,
doing, Wasim? Good? Fantastic.
excellent, excellent.
Um,
Happy Friday.
Habibi, how are you?
Hey,
All
I
right. All right, guys. Today we're going to be talking about digital assets and Bitcoin. Now, just to preface that, you look at the market, and the market seems a few stocks are really driving the market. The memory space, the semiconductor space, everything else, quite frankly, isn't doing a whole lot of anything. So we want to talk about digital assets and Bitcoin because it's a position we still hold and we still have a lot of conviction in. So who better to talk about that and maybe perhaps look at where we stand than Mr. Wasim? So Wasim, I'll turn it over to you.
awesome, man. Thank you very much. Thanks for joining. Yeah, I mean, probably the most interesting topic in all of finance, and in my opinion, kind of in the markets right now, right? Kind of the Bitcoin story. I guess crypto broadly, but Bitcoin in particular, right? Bitcoin has not been doing that well as of late. But then let's get into it and try to, as usual, try to give you an update of what's going on, give you a readout on what's happening in the markets, maybe give you a view of kind of what we see happening in the next few months with Bitcoin, and then yeah, maybe leave tons of room for questions and answers as well. Hopefully, we can try to answer some questions as well. So, all right, let's get into it. Let me share my screen first. I'll share my screen. Let me guys when you can see it. It's good, visible.
Yep.
Excellent. All right. So let's do a quick rundown of kind of what happened, right? Take you back a little bit back to October the 6th, which wasn't that long ago, by the way. And that was the
Nope.
a very recent all-time high, actually. So, it feels like it was a very, very long time ago, but it wasn't, right? So 126 and change was the all-time high that we hit. And, that was what, 8 months ago. So it doesn't take much for Bitcoin to get back up there. But that said, it has been a pretty severe drawdown, right? It was down on the year for 2025, which is not characteristic. There was a lot of expectations for it to do well last year. It did not do well last year. So there's still expectations that it's going to do well this year. We'll see. But so far, it has not been performing very well, right, since the beginning of the year. It's flat. Um, but it was a 52% drawdown from the all-time highs back in October. And since the beginning of the year, we've been pretty much in a bear market. So if you want to visualize what that looks like, let's take a quick look at that. It ain't pretty, right? And the nature of these kind of bear markets is they're really painful. And you can see, I mean, historically, um, that even though, Bitcoin has gone through a pretty severe drawdown, relative to previous drawdowns, and it's had several, as you can see by this picture, this is actually a pretty light drawdown relative to previous years, right? So you can kind of look back um, and see that drawdowns in the past have been 80% plus. So you could argue that volatility wise, Bitcoin is actually pretty tame this time, but yet it's still a pretty severe. 52% drawdown is pretty significant, right? Bear markets are what, 20%? Omar is a typical. Okay, what's
That's the technical definition. Yes, 20% drawdown.
right? So we're double that. It's definitely painful. There's no doubt about that. But that said, there we got to kind of come back and look at the main thesis here again. So I mean, unless
Just before you go on, guys, if you're looking at obviously playing Bitcoin, so if you're going to agree with the thesis, or if you have the long-term view that, hey, I think Bitcoin's going to go a lot higher, a great way to play that is going to be IBIT. IBIT puts pay a lot of money. So if you want to write a put on IBIT, IBIT, of course, and it doesn't consume a lot of capital, could be a great way to generate some capital, some premium, some income, and also accumulate a position. Because the whole thing is, as human beings, the we tend to buy when the market's highest. Okay, part of investing is going to be fundamentals. Part of it's going to be technicals, and the other part, the most underappreciated part, is psychology. So when you see all these other names like Micron and uh, Western Digital and SanDisk, and they're up like 400, 600, 300% for the year. Well, great. And then you see Bitcoin, which is actually down fair bit for the year. But just, is my thesis still true for the whole year? Am I still very much a bull on where I think this is going? Well, if that's the case, then you should keep accumulating. That's not advice. It's just a philosophical thing when you look at all investments that you have. If you believe in it long term, if it's down, is that not when you want to buy? But psychologically, that's the most difficult thing to do. Okay. So sorry, Wasim, I'll turn it back over to you.
No, no, you're bang on, right? I mean, and part of a bear market, it's a process, right? We gotta go through the pain, and there's two types of pains. I think there's price capitulation. So you've definitely seen that already on the drawdowns on the price, right? So if we can kind of look at a price chart, you can kind of look at a price chart of Bitcoin, right? We've obviously gone through a pretty severe market drop in the price here. So this is kind of back
Yeah.
October.
What do we peaked at 126, I believe?
126, right? And that was again, like I
Yep.
said, so early October. And then it's been a roller coaster ride since then, down to the bottom about 60K back in February, right? So that's the first capitulation is kind of price capitulation. It just kind of flushes out all the weak hands, just people kind of say, okay, I'm out, I'm done with this. This is crazy, right? 52% is a significant drop for most people. And also keep in mind, like in that same time frame, there's a lot of things that are the Nasdaq is on a tear, like you said, the AI trade is on a tear, the memory trade is on a tear. So you're looking at this thinking, wow, what's my opportunity cost? Like maybe I should
Hmm.
rotate and rotate into the AI play for now, write that up, and then I'll come back into Bitcoin at some point in the future, actually at a better price, right? So there's some of that going on. And then we've recovered a little bit since then. So what you're seeing now is I think two things. Like there's the price capitulation that's already happened. Maybe it'll go lower than that, but 60%, 60K is a big number relative to where we were. And then now we've
So
got
60K, you basically you don't want it to go back and break its recent low. That would be technically not a good thing to see, correct?
absolutely, yeah. And
Yeah.
it's on a downtrend now, right? And you can see like this is the 50-day moving average here. It was bouncing off of that for a bit. Went through it, went above it, hit against the 200-day, bounced off of that. So we're starting to play with the technical, moving averages here. So it's trying to get but it's not a lower low. So you could argue that, obviously it could absolutely go lower, but you could argue that this is good deep value territory. So right now, what we're experiencing is the phase of the bear market that's generally kind of viewed as time capitulation. You just got to wait it out, right? It takes time, just like in 2022. It's painful, it sucks, right? Everybody hates it, but here we are.
You've been investing in Bitcoin for a long time. Have you found that even in the past where it just stays dormant for a long time or goes negative and it just spikes all of a sudden?
Yeah, absolutely. And you can see it here in these drawdown charts, right? Like, here's,
Yeah.
been through so I got into Bitcoin around 2017 or somewhere in here, right? So it was kind of, I rode this thing all the way up and then, yeah, and then you ride it all the way down and it's painful, for a couple of years, actually. It was quite painful. And then it has gone through a few, very violent moves up. It's interesting because Bitcoin moves, on average about like 10 good days a year, right? So if you're in the
Yeah,
trade,
that's what I was getting at. Yeah.
if you're, if
10
you're,
good days a year.
if you miss those 10 good days in the year, then you've missed all the upside. You're just basically holding the chop for 340 plus days of the year. So you got to be in to catch the trade up. That's the challenge, right? And yeah, and being in means you got to weed through all these drawdowns, and it's painful. It sucks, right? Sentiment is low, but those are the opportunities. That's the deep value territory. All right, so
One more thing I want to add here, Wasim, that happens with a lot of stocks where it just stays dormant for a while and all of a sudden it takes off. But the second thing is Bitcoin is now more of a mature asset than it was back in 2012 or 14 or 17. It's a much bigger asset. What is the market cap of Bitcoin now?
it is about 1.4 trillion, something like that. And you
Okay.
can just
One
kind of
point, and then there's only I believe 14 companies in the entire world, although Bitcoin is not a company. There's only 14 companies in the entire world that have a market capitalization greater than 1 trillion. Okay, the last one to join recently last week was Micron, which we hold in the fund and has done extremely well for unit holders of the fund. But being at 1.4 trillion, it's far more mature than it was when the market cap or the value of Bitcoin, all the Bitcoins combined, were like 100 billion. Then you have much greater fluctuations. So as it becomes more and more mature, there might not be as greater fluctuation, but it doesn't mean you don't believe in it long term.
And actually, I would say probably it's a good time right now during these bear markets to come back and kind of check our thesis, right? Let's understand, like, is our Bitcoin thesis still intact? Let's ask those hard questions, right? Like, is Bitcoin going to zero, right? Because if it's going to zero, then you want to off this train like now. Let's just preserve whatever. And like,
Yes, of
we're
course.
done here, right? It was great. Thanks. Well, hope you enjoyed the ride and the scenery, but we're done here, right? So is that one
Yeah.
is one of those? Check yourself, right? And then the other thing is, well, if it's not, then you got to ask yourself the other side of this coin. Well, is this deep value territory? Is this a time for me to get in? And what's my time frame, right? Because if you're, generally speaking, nobody's ever lost money on Bitcoin if you've been in it for 4 years. If you look at any 4 year cycle, it's up, right? Pick any 2 points in time over a 4 years time horizon, 4 to 5 years, you're up, right? I mean, arguably could say the same thing in the stock markets too, right? But generally speaking, like this investment, this store of value is a long-term play, kind of like real estate, right? You don't get on real estate to make money in 6 months and you're out. You can, but it's rare, right? Unless you're doing some sort of flip or something. All right, so I'm pretty convicted, right? So I'm on the page that I think this is a good buying opportunity, and let's kind of walk through, where we're at, what's going on, and try to understand, when if anybody wants to hop back on the train, or if you're still on the train, like, why you want to stay on the train for the long term here, because there's definitely some upside moving forward. So first thing I want to kind of remind everybody about, right, is Bitcoin is absolute scarcity. Like it is the only scarce asset, really a true scarce asset, right? I mean, people argue gold is a scarce asset, real estate, land is a scarce asset. True, there's certainly, the supply is limited, but they're not necessarily scarce. There's actually abundance of gold on the planet. It's just the mind of
Well, Bitcoin is finite, right?
it is finite and
It
scarce.
will eventually, yeah, finite and scarce. Like with gold, I believe the production every year is 3 to 5%. So mining equals 3 to 5% additional supply every year. Bitcoin, we're almost at 21 million, which will be the entire supply of Bitcoin ever,
That's
right?
right.
So right now we're over 20 million, right?
21 million, right? We're not printing anymore, literally printing. There's 450 that are printed, created a day through mining. And right now, in the current, mining cycle, or the halving cycle we're in, 450 produced per day. And that will get cut in half in a couple of years as well. But 21 million, that's the number. And we did hit a milestone back in March. We hit the 20th million Bitcoin. So we were already at 20 plus million. Actually, today we're at 20.4 million or so. So, that's 95.4% of the total supply. And then the other interesting factoid here is 900,000 of the remaining million, there are approximately a million, will get mined in the next 13 years. And then the other 100,000 will take literally 100 years to mine because of the halving cycles. So Bitcoin today actually is more scarce than gold, and it will never be less scarce than gold. It will always be more moving forward because of the halving cycles. So the supply is actually capped and it's never going to change. So that's a very important backdrop to what we're discussing here, right? And that's a slightly different to what you would see with other scarce assets. All right. So, but what's Bitcoin kind of price moving forward? Let's kind of look crystal ball, what's going to happen, what potentially could happen. And I'm just going to present here a couple of these are models, not, again, these are certainly not facts, right? But they're models that have been kind of traced back to Bitcoin since inception, or very close to inception. So you can see here, like this, I'm showing this right now back to 2016, but you could go back further than that. The power law is still intact. Power law is basically, it's a log chart. Doesn't matter, details aside, right? All technical stuff, but this is a log chart of the price, a log chart of time along the bottom. Is what it typically shows, and it follows basically a model. It's actually a model that's very common in nature. And it basically has to do with you, sometimes you have exponential growth and you have linear growth, right? The power law basically follows a certain type of growth pattern that exists in nature. And in this case, it's what you see here are kind of the price bands that it kind of has been hugging over the last, since inception. And it's pretty much been consistently staying within these bands. Sometimes it overshoots to the upside or to the downside. You've seen that as well. But in general, it kind of hugs these bands, right? So what you're seeing right now is, and this is why we keep talking about, Bitcoin being in potentially deep value territory. Again, that does not necessarily map to the bottom, but it does signify that we are closer to a bottom than we are to a mean or to a top. So if you kind of fast forward here, look, and if I just kind of hover over some of these bands here, you'll see like the upper bands of Bitcoin, you know, they're based on this logarithmic scale. You're talking some massive numbers here. Like these are at least you're talking, 4 or 5, in some cases almost 10x from where we are today over and I'm just hovering like this is end of year, right? Again, I'm not crystal ball card. I'm not saying this is going to happen. I'm just saying based on the power law and what we've seen historically, that is certainly potentially a path forward. But that said, it could also come down first before it comes back and hovers around the mean. That's one interesting fact. The other interesting fact is if you look around the mean where price typically kind of fluctuates, this is kind of that orange line. This is the trend line, right? What you're seeing right now is over the course of 2023, 24, even 25, we've never really had a blow off top. We've had them before. You see this here. You see this here, and this is correlated also with drawdowns, right? No surprise, right? You get a blow off top, just like we're seeing now in the markets. There's a risk that we might see some mean reversion in the Nasdaq and the S&P 500 and some of these names that Omar was talking about. They can't go up forever, right? So then you got to ask yourself, right? Is this deep value again, or should I wait till it gets back up here before I get back in? Personal choice. But one thing to note is based on the power law, we have not had a blow up top for a couple of years, and that could be a symptom of the different types of capital flow coming into the market. The other way to look at this is just through magic lines, right? And, so Theta spends a fair bit of time talking about mean reversion and looking at the trend lines, right? So here, what you're looking at is, the 200-day moving average, that's probably, and the 200-week moving average. And Bitcoin has been very respectful of particularly the 200-week moving average, is this purple line here. It has pretty much respected it all the way up since inception, right? There were periods of time, this is the FTX blowout that happened in 2022. It was a pretty nasty bear market overall, including in the crypto world. So it did overshoot the 200-week moving average. But since then, it's been respected. It has been respected on the way up. So it's upward sloping. It's close to the 200-week moving average, but has not touched it yet. So there's potentially more downside from here. That's why you keep hearing about, Bitcoin going down to like the 60K, the 50K levels, because it's where the 200-week moving average is. So it's very possible it could come back down there again. Any questions here, Omar, or comments you want to add?
No, nothing. The one thing I wouldn't mind, so for someone who's maybe not so familiar with Bitcoin, why should I buy Bitcoin? Like, just looking completely objectively, like, what am I doing? What do I do with this stuff? Why hold it? What's the purpose? And also, is it a hedge against governments printing money? Because we know how much debt that governments around the world hold, and we know that at some point in time, they're going to have to print a lot of money. Now, money you can print a lot of, gold you can mine, and it's harder to move those things around too. Bitcoin is the only thing that's globally acceptable that has a finite quantity. We'll see.
Yeah,
Would you like to add to that? Like why should I hold this?
yeah, and it's often floated as the debasement trade, right? So it's if you want to protect your wealth, I mean, obviously you can hold cash, but cash typically is viewed as losing purchasing power. It's like
Hmm.
you're melting ice cube, right? So then you got to ask yourself, okay, well, I don't want to hold cash because I'm losing purchasing power, and it's even worse. So if you're holding U.S. dollars, you're probably doing better than any other currency. If you're holding, the Lebanese lira, or you're holding the Egyptian pound, or you're holding even the Canadian dollar, right? Relative to the US, it's actually
The Venezuelan currency.
Venezuela. Like, there's a lot of currencies that have hyperinflated, right? Or have been printed out of existence, right? So they lose value. So you're
But
better.
even the ones that are not hyperinflated, even like Canada, we experience inflation. United
Well,
States, we
US,
all experience inflation, right?
even the US dollar experiences inflation, right?
Of
I think the
course, yeah.
EPI print came out last week. What is it, 3.8%, right? So I mean, that's not
Hmm.
small numbers, right? Like you're talking about, like when you talk about 2%, 2%, I'm talking about 2% inflation, you're losing purchasing power. You're cutting your purchasing power in half every 30 years. So in your lifetime, you're going to drop that. You're going to lose about 75% of your purchasing power if you hold it in cash. So then the question you got to ask yourself is, what do I do with those dollars? Well, you can spend them, right? That's the easy way. Go buy stuff, buy yourself a vacation, you buy some utility with it, right? Like a house,
Hmm.
car, or something useful, or you invest it. So then you got to think about, okay, if I invest it, where am I going to put it? Well, you can put it in gold and real estate, you can put it in the equity markets, you can put it in bonds, etc., or you can put it in stores of value like Bitcoin. Bitcoin is essentially a store of value, and by virtue of it being a finite, scarce asset, a commodity like gold is, it should preserve its value over time. And if you look at, the Bitcoin chart, let me just go back to that for a second, right? If you don't believe it, you can just go back. Let's talk facts here, right? So if I go back to the Bitcoin chart for just a second, I look at all of time, just go back to the beginning as much as I can, at least on TradingView. It's 2015. Actually, 2009 is the beginning, but okay, close enough. I mean, it's up and to the right. But so is the S&P 500.
Well, yeah, of course. But this is obviously increased a lot more in value since since then.
Absolutely, right? This is the S&P 500. You can go much further back in time, right? The S&P 500. So what you could be arguing here is the S&P 500 going up, or is the value of your money coming down, right?
Yeah, of course. Well, it's probably a combination of both.
So
Uh,
that's where Bitcoin comes in, right? It's basically a store of value. It preserves your wealth over time.
and I
And
think if you go, sorry, we'll see. I was going to say if you go globally anywhere in the world, I think a lot more people know about it now than they did, years ago, right? If you ask, if you went in 2017 when you first got into it and said, "Hey, have you heard of this thing called Bitcoin?" Yeah, some people knew, some people didn't. 2009, nobody pretty much knew. But now, if you go kind of go to any corner of the globe, pretty much everyone knows what you're talking about.
yeah, it's becoming much more accepted, that's for sure, right?
Yeah.
And I think over time, because remember, it's tackling actually probably the most useful form, the most important use case for society and us as a species is money. Like we need a way to communicate, and we need a way to transact together and exchange value. So money is actually fundamental to growth of society and global trade. So over time, and it's no surprise the recent Strait and Hormuz skirmish that we had, right? What did
Mhm.
the Iranians want to collect their money in, right? Like they can collect it.
Tolls,
Yeah, they wanted to collect, Bitcoin,
Bitcoin.
use
Yep.
Bitcoin, right, to collect tolls for the Strait of Hormuz. Now, whether you agree with that or not, whether it's nefarious or not, doesn't matter at this point. The point is, somebody sees a valuable use case there that says, okay, I can't trust the US dollar because I could get rug pulled on that any time. Turn off the SWIFT, and that has happened. It happened in during the Ukraine Russia war back in 2022. Russians were taken off of SWIFT, basically excluded from exchanging US dollars. You could do it in gold, but gold is very difficult to exchange with. So, Bitcoin sounds like a reasonably good settlement layer that you can use to exchange value. So it does have
Well,
some.
it's also difficult to transport too, right?
Absolutely, absolutely. Yeah. Yeah. And I think Magdalena says you can buy real estate in the US with BTC. Yeah, you can absolutely do that. I've seen it myself globally as well. If you travel to Dubai, it's all over the place. It's very, very common. Right? Um, yeah, and most.
I'll read the rest of our question here. You can now buy a house in Florida without selling your Bitcoin and triggering capital gains tax. You can use your Bitcoin as collateral for a loan, crypto-backed mortgage. Yeah, we were talking about this, man. We need that's interesting that you could do that. How many more places around the world will allow that, and how much more adoption will it get? Again, what does that mean? That means more demand for Bitcoin, and
Absolutely.
the more demand you have for Bitcoin, and you have a finite quantity, well, then because Bitcoin works simply on supply and demand. When we look at any stock that we're trading, we're looking at earnings, right? We're looking, okay, is this company going to make more money in the future? Bitcoin is not that. Bitcoin is simple supply and demand. There is a finite amount of supply, and that's going up by 450 every day. But the demand is far higher than that. Okay, that's it. That's simple as that. Once supply equals demand, the higher the supply, the higher the demand gets. So you have more global adoption, more people wanting it. Well, the demand will far outstrip the supply, and that's when you have a massive upward pressure point, right? Dwayne asked your question: where is the best, safest place to store your Bitcoin as a Canadian? Private wallet, an exchange? I have ShakePay at present. Good question, Dwayne.
So the answer is never on exchange, right? So not your keys, not your coins. If you're putting your money, so transferring your fiat money, your dollars to exchange to buy Bitcoin, great. Absolutely, you have to do that, just like you have to use IBKR to buy Tesla shares. But once you've bought your asset, you don't want to leave it there. That's like, buying a gold bar and leaving it with your neighbor. Okay, you may trust your neighbor, but at the end of the day, like you better off putting it in your own custody. Right now, what that does that custody look like? Sure. I mean, self custody is definitely the best way to go. Cold card is like a cold wallet, what they call basically a cold wallet, right? So the cold card, cold wallet is not a bad option. There's a few others. Trezor is another one out there. So those are the ones. Try to use a Bitcoin only a cold wallet. You could also use a hot wallet that's kind of on your phone. in that case, you may want to use like um, Aqua wallet or something like that. But again, these are hot wallets that you can use for smaller balances. But if you have, once you start losing sleep at night because the balance is become substantial, then you probably want to move to a cold wallet. And I would suggest, yeah, the cold card or a Trezor at that point is probably your go-to. Um, all right. So, but yeah, definitely not the exchange. And ShakePay as an exchange is definitely not bad, right? Like using ShakePay as an exchange, certainly, or use Bull Bitcoin, right? That's kind of the other. They have a really good mobile app as well. So those are two good platforms that are used that are Bitcoin only. Okay, good. You got a Trezor. There you go. That's not a bad option. Okay, cool. Yeah, and Bull Bitcoin, absolutely. Yeah, definitely a good spot. All right, so I got a few more things I just want to show here, right? So we've kind of gone through, okay, looking at forward-looking forecasts of potentially, is this a good deep value zone? I mean, and again, we're in the realm of we are convicted Bitcoin is not going to zero. You believe in the technology, you believe it as a store of value, you believe in the scarcity use case and the finite scarcity use case, and you want to inject some capital into that. And as long as you have a long enough time horizon, you should see upside over time. And yeah, custody is definitely, if you're going to buy spot Bitcoin, because I mean, there was in the past only one vehicle for you to get access to Bitcoin, and that is buy Bitcoin. There's no other way, which is kind of coming back to Duan's question there. But today, Omar mentioned earlier, you can buy IBIT. It's not Bitcoin, but it's a proxy to Bitcoin price, right? You could buy, strategy or MSTR. That's another kind of leverage Bitcoin play. There are several Bitcoin.
Well, it's not. It's not that it's not Bitcoin either. Bitcoin, it's they hold Bitcoin, right? So if you want to sell a call or a put on Bitcoin, there's an ETF called IBIT, right? IBIT is whatever, however many assets they hold. They hold Bitcoin to back those assets.
Yeah, and
Because
in
yeah,
registered accounts, you cannot hold spot Bitcoin, right? So your only vehicle
correct.
really is to buy an IBIT, which is actually a very good investment from that perspective. Because yeah, to the points Omar is making, it's highly liquid. It does give you a very good options market as well, right? So, but if you're looking at holding actual Bitcoin, IBIT is not actual, but you're not holding it yourself. BlackRock is holding on your behalf. That's the difference.
Right.
It's absolutely exposure to Bitcoin price. That is absolutely okay. That is absolutely true. Yeah, and Stephanie, bang on, right? Like SATA, STRC. We'll get into those in a second as well, right? So those are a bunch of vehicles now to give you exposure to Bitcoin, or at least to some sort of digital credit that gives you a yield, which is kind of cool. All right, let's get into that actually. So I got a couple of things I just want to walk through here, right? So all right, so now that we've got an idea of Bitcoin, we understand the kind of the models that can help us guide us towards where price may go, and absolutely it'll be volatile. It'll be a roller coaster ride all the way up, but it's going up nonetheless, right? That's the key. So let's look at supply demand variables here and try to understand like who the hell is selling? Why is price down at 70,000? Right? If there's all this scarcity and this talk about, this we're running out of Bitcoin, like who the hell is selling, right? And why are they selling? Okay, well, let's look at that side of the equation. Then we'll go back and look at demand side of the equation. All right, so first question is who's selling, right? And you can see here, I mean, Bitcoin was until 2024 a retail game, right? It was all retail. There was very little institutional. It was like so, but in 2024, that started to change. The ETFs came online in January, BlackRock came in the picture. So as of 2024, 2025, it became more traded. And you can see that actually in the realized loss breakdown, right? So a bit of a busy chart. This is price, right? So, no surprise, like whenever you see dips, you see a lot of selling pressure, right? Whenever you see flat line, there's a lot of selling pressure. This is October, right? When things started going south. And sorry, this is October here. When things started, you can start to see like this is significant selling pressure. Actually, it's probably it is not it probably it is the most selling pressure we've ever seen on Bitcoin, right? Over the last 6 months. It's significant. There's a lot of people capitulating, saying, I'm out, I'm done here, right? Especially when you hit the 100,000 K level, right? That's 100,000 right there. That's a psychological level. So everybody was happy, expecting Bitcoin is going to moon right above 100K, and it didn't. It flopped, right? So
Why do you think that is, Wasim? Why do you think there was so much selling pressure around then?
It was many reasons, right? Like one of them is liquidations that happened in October the 10th. October the 10th was a significant event, right? This is so there was a lot of capitulation around liquidations. There was some issues with Binance as well as an exchange, which is the biggest exchange. There was the FOMO trade. Like if you go back in time and look, if I look at Nvidia or some of the AI plays over the same or AMD or some of the names that ran into late last year. I think a lot of people were FOMOing about missing that trade because they waited. They've been waiting all of 2025, expecting a blow off top in Bitcoin, and the blow off top never came. Right? I'll go back to like the power law chart here for a second. Right? When I say blow off top, like we never saw this kind of behavior where we significantly stretched above the mean. That never happened in 2024 or 25. Right. So
Okay.
everybody's waiting for that. It never happened. Right. So people were waiting around. And then at some point you say, the hell with this, I'm out of here. Right. I'm moving my money over to the AI trade. Fair enough. And that's part, I think that's a lot of it. Gold was the other factor, right? So there was a lot of people they saw what happened to gold, and typically there's a significant correlation between gold and Bitcoin. And gold has outperformed the entire market over the last couple of years. Actually, if I just do a quick check here of gold, right? If I just do look at what's gold here, right? So gold, I think there's gold, right? So
47? Yeah.
63% in 2025, right? 26% in 2024, right? Like it blew past the S&P 500, right? It was the best trade for a couple of years. So I think there's a lot of FOMO around that as well. People thinking about should hop off Bitcoin because it's not doing well, get on gold. So there's that. And I'm sure there's other reasons as well. So you're seeing that, right? And the selling pressure has not subsided. It's still quite significant, right? You're still seeing like almost $500 million of outflows, right, from Bitcoin selling pressure. This is selling pressure. That's significant, right? And a lot of that is coming from 2026, right? Which means people that bought this year and are capitulating out this year. They bought in thinking, okay, I've hit a bottom, all right, and they say, okay, I'm out. This is just too much for me. I don't want this anymore. And 2025 as well. Like there's a lot. You can see, look at all the colors here on this graph. Like 2025, there's a lot of money going out, right? That for Bitcoin bought in 2025. Okay, so there's that side of it. And even with this drawdown, like if you kind of look at previous drawdowns, and let's compare, this is unrealized profit. So this is people that have not sold. So the one I showed you before was people that sold, realized. This is unrealized. And this is the beautiful thing about the blockchain. Everybody can see it. And now with these AI tools, like, you can run these reports all day long on the blockchain and try to get like this and get a really good view of what is going on with sentiment and what is happening actually at the blockchain level. It's really cool, right? This is a tool that we've never had before. You can really get like real time, and I'm talking like this is real. This is like today. Like I'm getting a view of what's happening now, right? You can still see that there's about 79% is the number here of unrealized profit. So that means 20% are underwater, 80% are above water. That's the way to read this chart. So 80% are in profit, which tells me that okay, there's a lot of old money. People bought it quite a while ago. And even at this price today, which is 73,000 and change, people are still in the money. So if they sell today, they will still make profits. But there's 20% that are underwater. So that's what you got to kind of, and relative to previous drawdowns, there's cases where, we saw half of the holder base of Bitcoin underwater. We're not quite at the half level. It could go back there, right? If suddenly Bitcoin drops back to below 60 to like the 50s, absolutely, we could go back to this kind of this area, but we're not there yet. All right, so that's the unrealized profit, and then maybe the last thing here is, then I think this is probably the most important chart right now in Bitcoin. So let me just kind of explain this a little bit here. So what you're seeing is, it's actually an interesting chart because you see price at the bottom, which is not where typically you would see it, right? So price is the bottom. And so what this is showing you is where did people buy into the Bitcoin network, right? At what price? So, and this line here is the total cumulative investment of the entire Bitcoin ecosystem. And it's kind of interesting because you see a lot, contrary to popular demand, popular, kind of expectation is you would expect a lot of people have bought like way, way back here. Like you would expect this graph to be very skewed. But in reality, you're seeing, there was definitely buying pressure back here, but Bitcoin really only became popular and really started getting kind of on the radar when it hit about 60,000. This is 60,000, but it's not 6,000. This is $60,000, right? Well, if you go back to the price chart, $60,000 was like 2024, 2025 territory. That's the time it was hit 60,000. So interest in Bitcoin actually spiked when the institutional investors came into the space and said, okay, this is an area that we are very interested in. The BlackRock ETFs, Morgan Stanley now launched one this year, Fidelity, all these funds came online, and they said, okay, it's legit. We're all in. Larry Fink, all these players came into the space. That kind of validated the Bitcoin ecosystem, and you see a lot of institutional money come into the space here, right? So you see a lot of people bought above the current price point we're at right now. We're at 73K. There's a ton of buyers in the space, and blue is long term, which is more than 6 months ago, and red is like short term holders, is less than 6 months ago. So the interesting thing that in this chart, though, is you're starting to see a lot of red here, which tells me that people are buying the bottom. People are starting to see value. People are saying, hey, I can nibble at this price. I'm going back in, right? So they may have sold out what I showed you earlier, right? The realized loss, right? They sold out a higher price. Okay, they may have invested in somewhere else. They may have made some return on capital somewhere else. And now they're starting to get interested again. So I'm really watching this chart carefully. And this is a very, very important development right here, right? This is showing that people are starting to get interested again, which is a very good sign for people that are thinking long-term about this. You're basically moving your center of gravity from the right towards the left, rebalancing your cost basis for the entire ecosystem. It's a really interesting chart. So you want to take a look at kind of, a good time to get in. Sure, you can wait till it gets back to 60 to 50K if it goes back down there for sure. But 70K is still not a bad price.
A quick question for you. We have a question here. So willingness to ask, so if you keep your Bitcoin in a cold wallet and sold, is it invisible to the CRA to trigger capital gains? Very good question.
Okay, so when you say sold, right? Because if you're going to sell, I assume you're going to buy something else. So if you're going to do, let's say you want to
Let's
sell
say
your
you buy real estate in Florida.
Yeah, so in that case, absolutely, right? So you can take your, that's the beauty of the Bitcoin, right? And recently we saw some of that too, by the way. So this skirmish that happened in the Middle East, right? There's a lot of wealth in Dubai. It happened on Friday, by the way, right? It's February, it was on a Friday. So there's a lot of wealth in certain regions, like in Dubai, for example. And that wealth had to move somewhere, or it had to do it on the weekend. Well, banks are closed on the weekend, so how do you take your wealth with you? So definitely the use cases like this is very interesting. So yeah, you could absolutely move your Bitcoin and buy property with it. So on the other side, if you want to trade it for fiat currency, if you want to buy Canadian dollars or US dollars, then yeah, you'd have to do that on exchange. And when you do that on exchange, that triggers a capital gain, right? Which the exchanges, because they're regulated entities in Canada, they would report.
Yeah.
So the short answer to your question is yes and no.
Yeah. So if you want to change it to money, yes. Change it to fiat, yeah, it's gonna be no. Stephanie asked, so what is the chart? What the chart is showing in terms of what price people are refusing into? Are you saying purchasing into?
Yes.
So
Yes.
yeah, yeah. So basically, from when you have ETFs now that do this, that means the average investor who owns mutual funds, who has a portfolio at the Royal Bank, for example, they're going to have a slice of their assets in Bitcoin. That puts even much more pressure on the buy end, on the demand. So, but a lot of these people they bought it at higher prices, and maybe they're like, oh, I'll get rid of it because they're not long term conviction in it. So Stephanie says, when you sell your Bitcoin, you're likely selling on an exchange. The exchange will note the price that you sell at, and then there is an adjusted cost basis which will trigger a capital gain rebuying. Yeah, the price people are buying it. Yep,
Yep.
that is 100% correct.
Absolutely. Okay, so let's move forward here, right? And now we've looked at kind of the supply, the supply side. Like, there's tons of selling pressure, right? So contrary to popular belief that everybody's holding their Bitcoin, nobody's selling anything. Well, the on-chain metrics tell you a different story. The reality is there's a ton of selling pressure going on in the market, right? And even today, like I just showed you, like it was $500 million of trading on a typical day. That's a significant amount of trading for a $1.4 trillion asset. Okay. But that said, don't get me wrong, there's still a lot of people holding that are long-term investors in this space. But there's also a fair bit of trading that happens in Bitcoin, which moves the price. I want to give a quick kind of overview of now looking at the buying side. So okay, great. So we know we have finite cap supply. We know there's a ton of supply coming online, right, every day. That's kind of depressing the price because people flooding the market with coins and people trading it because it does have quite nice volatility. But what about the buy side? So who's interested in this stuff? All right, well, let's take a look at that, right? So I've been tracking this chart for quite some time, and it's a really interesting view of the world. So if you go back to even as 5 years ago, like 2020, the number of entities that were, and when we talk about entities, I'm saying non-retail, right? Everything but retail. So this website does a pretty good job of kind of characterizing and tracking all of that. So there's about 250 entities kind of globally, and these are like institutional governments. You can see it, countries, ETFs, etc., private companies, mining companies, etc., that are buying up Bitcoin. It's almost, it's not insignificant. It's 19% of the entire Bitcoin float is now maintained by 3.9 million of the 21 million. Or actually, to be specific, it's the 20.4 million right now, right? So 20.1 million, actually, not 20.4. Get my numbers right here, right? So the nice thing about Bitcoin is you don't have to remember all these numbers, right? You can kind of just go and check the numbers, right? So if I go to my time chain calendar, it tells me, oh, there's 20.03 million, right? 95.41% of the total 21 million. All right, cool. So if I go back to that view here, so what you're seeing here is ETFs own 7% of it, countries, and I question this number. I think it's actually higher than this because no, sovereign wealth doesn't necessarily report, right, how much the Bitcoin they hold, but these are the ones that we know about and can tell on through the blockchain, the addresses and who they're owned by. Public companies have a significant chunk, and then everything else, right? So that's not a small number. I've been watching this for a while, and it's going up. So the universe of buyers in the crypto space is not just retail; it has grown, and now you're starting to see that there's a lot of interest in this space, especially in the institutional side, and that's really important, right? Traditional finance is now interested. So BTC is now an institutional play. It's not just retail. You're seeing what you call financialization of Bitcoin is coming in. There's products being built. Magdalena just mentioned that you can start taking loans and using it as a down payment for property. So people are starting to think that, hey, I can use this as just another commodity, a store of value that I can use as collateral against the loan. So it's driving some interesting use cases, and companies are starting to pay attention to that. Cool. So let's look at one of these. So let's look at ETFs. ETFs is a significant part of the ecosystem now. You're starting to see a lot of ETF flows, but again, ETFs, right? Just like IBIT as a good example, as Omar mentioned, like IBIT is one of the biggest ones. And actually, I can just show you that. I think it was, it's coming up. Okay, I'll show it in a second. Yeah. So the ETFs here are, you're seeing, ups. So red is inflows, money coming into the Bitcoin ecosystem. Blue is outflows, people selling out of the Bitcoin ecosystem, right? So you can kind of see, like, for the majority of 2024, there was a lot of inflows, more red than blue. You could argue even 2025, except the back end of 2025 when we had that all-time high in October, right? Then you're starting to see the outflows start to take over, right? And that's, again, the selling pressure that we talked about earlier. Tons of selling pressure. Bitcoin kind of stabilized after February. There's buying pressure coming back into the space. Some of it, but recently you're starting to see some significant outflows, and that's kind of driving some of the weakness in the Bitcoin spot price right now that you're seeing. So that's one aspect. But even with that, and this is the interesting part, even with that, right, when I look at the overall, and this is a Bitcoin ETF AUM, all of the money stored in the Bitcoin ETFs today, and this is all the different ETFs. Here's IBIT as an example, and it's the biggest one. You can just tell, look at the color code here, right? Like this is, if I disable IBIT, it's a big part of the overall AUM. That's why we invest in IBIT, because it is the biggest one by far.
It has the most liquidity too.
It has the most liquidity, great options market, et cetera, right? Anyway, and they custody their Bitcoin with Coinbase, by the way. So FYI. So that's another play that you can use as a proxy. Anyway, details. But yeah, you could see like the AUM absolutely has come down. Like, it was at peak. It was, what is that? 100 and...
Yeah, about 180 billion.
Yeah.
It's come down quite a bit, huh?
It's come down quite a bit, right? That's not a
Yeah.
significant drop in the ETF flows out,
Yeah.
right?
Well, 80 billion is a lot when compared to a market cap of 1.4 trillion, right? It's meaningful.
So that's one outflow. But yet, even with that, it's still hovering around $100 billion. So it's not an insignificant market.
No.
So, and this could turn very quickly as well. Like once interest comes back into the space, don't be surprised. Like you see this boom pop back up again. As soon as Bitcoin pops, interest, uh, people are not interested in Bitcoin right now, but that could change very quickly. All right. So that's the ETFs. Well, the other interesting thing as well, actually, let me just show one more thing here on, is stable coins, right? So this is a new thing, right? Stable coins, we've talked a little bit about it in some of these sessions as well. So you're probably going to hear a lot about stable coins, whether it be, USDC, which is Circles and Coinbase partnership. That's a stable coin here available in mostly in North America. You have USDT, which is Tether. That's mostly international based. And I'm not promoting this. I'm just giving it.
We'll see. For someone who doesn't know, what is a stable coin? What does that even mean, stable coin?
Great question, right? So let's look at a stable coin. So here I'm looking at CoinMarketCap. This shows all of the cryptos and crypto universe, right? So Bitcoin obviously is the big granddaddy here. It's the majority of the crypto universe. I think dominance today is probably around 60% of the entire crypto universe is Bitcoin. But you're starting to see things like Tether, things like Circles show up into kind of the top 10, let's call it cryptos. And these are based nothing more than a digital representation of the US dollar. And you can see the price, no surprise, is basically a dollar. Tether is a dollar. So the way this works is this is pegged 1-to-1 with the US dollar. So you bring in US dollars, you want to purchase something in the digital world using US dollars. Well, you can use PayPal, you can use, a bank that can take your dollars and transfer it to another banking institution. But what if you want to do it peer to peer? What if I want to send money to Omar directly? There's no mechanism for me to do that directly. That's the keyword, directly, right? I have to use a third party, a bank, PayPal, some Venmo, some sort of protocol for me to exchange value that doesn't exist on the internet. But now you can do it yourself using stable coins. So stable coins is I want to transact digital US dollars. I could take my US dollars physical, put it onto an exchange. I convert it into a stable coin. It's either going to, most of the time it's Tether, USDT, or USDC. Most exchanges will support that. And somebody was saying earlier that they use ShakePay. So, ShakePay you can do Tether, right? So you can take dollars, put it on there, and it will convert it to Tether for you. And then you can, move that money around. And what Tether as the company does is they peg it 1-to-1 to the US dollar. They reserve it with treasuries. So in the back, they're holding treasuries. So it's always collateralized 1-to-1. That's how stablecoins work. They're pegging it 1-to-1. They guarantee, let's call that. That's by legislation, by the way. The Genius Act in the US was legislated earlier this year. So by legislation, these companies they must peg it to the US dollar 1-to-1, and they must fully collateralize it with US treasuries or at least some hard asset like gold or Bitcoin. So in the back, stablecoins drive Bitcoin demand because they have to collateralize it in the back end fully 1-to-1 by law, right? Like they have to be able to audit any time, and they have to prove that. That's the Genius Act. Okay, so and you're starting to see that more and more. So I can show you that, right? In the again, like the beauty of these blockchains, right? You can see everything. So if I go to the stablecoin supply, and this is basic supply, meaning that how many have been added to the network, right? Which is actually a demand thing. People are buying stablecoins. You can see, like, it was pretty flatline until earlier this year when the legislation kicked in for the Genius Act, and you can see like the numbers. The amount of money flowing into the stablecoin network, independent of Bitcoin, but this is Bitcoin price. It has nothing to do with Bitcoin price. This is because it has utility. I want to be able to transact in US dollars digitally. Great. Well, use Tether or use USDC, depending where you're sending it. So that's stable coins. And you can see that the majority of it is Tether. Tether, everything in green here basically is Tether. It's a large part of the ecosystem. USDC recently has started to take market share, particularly in North American markets. And just another slide here, stable coins, just if you want to really, really get into the weeds on this, right? Great website here, by the way, DeFi Llama. If you click on stable coins, you can see all the stable coins, and there's tons of them. And by the way, some of these are actually companies like PayPal. Hey, look, PayPal, BlackRock, interesting. So Ripple, right? Like this, companies, any company can create a stable coin. The key is you have to, by law, back it 1-to-1 with collateral to peg it against the US dollar. So Tether by far is the biggest. You can see by the market cap. So the total market cap of stablecoins is about 320 billion. Market cap of Tether is more than half of that. Then you've got USDC is the next up and comer. The other interesting thing is, what networks they run on. But anyway, just so you guys know, like a lot of these run on Ethereum. Okay. If you go back to USDC, it runs on Ethereum. So you may be hearing a lot about Ethereum in kind of the second crypto after Bitcoin. That's partly why, because a lot of it is driven by the stablecoin market, which is increasing. And there's Scott Bessent, the Treasury Secretary for the U.S., looks at stablecoins becoming a 10x market from where it is today. So right now, so what is it, 320 billion? He's looking at it becoming a $4 trillion market in the next few years. So it's going to grow substantially. So that's another source of demand that's driving in the back end. These companies have to buy collateral, and the collateral they typically buy is U.S. Treasuries and Bitcoin or gold. All right. So that's another. Do you have another question here, Omar? Do you want to go over?
Yeah, William asks, if you borrow money to buy Bitcoin, is the interest tax deductible since it's for investment purposes? Generally, no, but you should check with your accountant. Normally, the interest tax deductibility is there if it is expected to generate income. You are not going to generate income by holding Bitcoin, but I would verify. I'm not an accountant. That's from what I know, that's the case. So, no interest here, so therefore no deductibility.
Right. Although, you could probably look at, well, now that there are, the digital credit instruments are coming in. It's a good question, actually. I don't know the answer to that. So, so this is actually probably a good pivot right into kind of the last
I
section.
was going to say that's a good segue into the last one.
The last part, like where, again, we're talking about demand here, right? So we talked about ETFs being a demand driver, stable coins, retail obviously is always there. Institutionals, governments are buying now, public companies, private companies. So here I'm now moving into, if I go back to you for a second, right? So we talked about ETFs, countries are countries. Now I'm looking at public companies. And public companies, the biggest kahuna in town is strategy, right? So strategy is buying a ton of Bitcoin, right? And they're doing it through their digital credit flywheel, right? So anyway, it's a highly controversial strategy. There's people that are, understand it and are very much for it. There are people that understand are very much against it. It's a very interesting kind of financial engineering that's going on. But strategy as a company has been buying, and if I look at the chart, I like this chart, right? This is basically every dot here is a purchase by strategy of Bitcoin. So you can see all the way back till when they first bought it in August 2020, and they bought it, or I think around like $15,000 or something. Actually, you can see it right if you go to the purchases, you go to the list here, go all the way back in time. Like they bought it all the way down here. It was 21,000, right? 21,000, 16,000. Sorry, average price not here. Sorry, 11,000, 10,000. They're buying it at that price. This is after the FTX collapse happened in 2020. Sorry, FTX collapse is up here, but even this is after, they started looking at Bitcoin back after the COVID crisis. So this is when they first got into it. But they've been buying relentlessly since. They're sitting on an absolute hoard of 843,000 Bitcoin. That's 4% of the entire float. So if you go back to this picture here, strategy itself represents a significant portion of the public companies here, 4% of the entire. The closest number two is Marathon, which is a public company. It's a Bitcoin miner, and they only hold like a tiny portion relative to strategy. So as a public company, they hold a massive amount, and they're continuously buying. Like they just bought last a couple of weeks ago, actually 24,000 more Bitcoins. And the way they're doing that is they're basically selling shares into the market. They're selling MSTR shares. You're giving them money. They're taking your money and they're immediately converting that to Bitcoins on the other side. And every Monday morning, if you go to Twitter, Michael Saylor, who's the CEO, reports, or the chairman, actually, is not the CEO. Fong Li is the CEO. But he reports his purchases of Bitcoin on Twitter. And it's quite interesting. So, you can kind of go back and look at 2026. They've already made, you're talking about 16 or 17 purchases this year, right? It's a significant, he's buying almost every week. And some numbers are quite large, 24,000, 34,000. So there's a lot of buying pressure coming from strategy, but not just strategy. There's a ton, as I said, of public companies in this space, and they are many of them are buying on a very regular basis, and they report all of this. You can actually track it in their filings. They actually list their filings here on this website, so it's pretty cool. So there's a lot of buying pressure coming from that. Um, Recently as well, the one that's making a lot of news is Strive. I'll get to that in a second because I just want to introduce STRC. So now we're going to talk about digital credit. So these companies are buying, they're taking Bitcoin, they're putting on their balance sheet. So MSTR today, they're holding 843,000 Bitcoins. This Bitcoin basically represents a value of an enterprise value as part of their enterprise value that they use to shore up their balance sheet, right? So this is like buying real estate. Think of it that way, right? You're buying real estate. You buy land. Maybe land is a better example instead of real estate. You buy land. Land has value. You expect that value to appreciate over time. Strategy, their point of view again is that Bitcoin is going up to the right forever. Their average CAGR is about, and you can see it in their analysis. They're basically looking at it going up over time about 30% per year. That's kind of their projections, and they're basically holding it because they think Bitcoin has more value up and to the right than holding cash. So holding cash means you're losing value. Holding Bitcoins means you're gaining value. And the recent thing they've done is they've introduced digital credit, which is this is perpetual equities, right? So these are perpetual preferred credit instruments like STRC, stocks you can buy on the open market. They're pegged at par at $100. The way these things work is they basically pay you an effective yield, right? So right now they're paying you 11.5% annually, and they're paid every month. So you can see
So
that
if I
here.
just own this, we'll see, I get paid 1% a month.
You
Is
get
that
paid.
correct?
That's absolutely correct. So you can see right here in the dividend payments, the record date is the 15th, just like any other dividend. There's an ex-dividend date, a record date. So if you're holding the stock on the 15th, you will get a payout at the end of the month. And yes, you're very close to $1 per share.
What? Yeah. So what is my risk here then? How could this like 11.5% to pay out when the underlying asset doesn't generate income? How is that sustainable?
Yeah, the way they look at it, right, is the key thing here is BTC ARR, right? So if you go, is they perceive that the Bitcoin average rate of return for Bitcoin over the next at least 10 years is usually what they're looking at, right? Is going to be about 30% on average. So obviously, it has not been that last year. It has not been that this year, but on average, right? You got to look at it at 4-year intervals, right? So on average, it's about 30%. And historically, by the way, it's actually much more than that. It's actually been about 60% is the average rate of return for Bitcoin. So they're using a conservative, let's call it 30%. So if they are taking your money and they are putting that on their balance sheet and they're expecting that this asset is going to accrue at 30% on average per year, but they give you 11% of that, they're still keeping
Eight, 18 and a half.
the 18 and a half, let's call it 20% in their pocket. So
So my
that's,
risk here would be that if, let's say, the rate of return is 5% theoretically for like 5 years, then they cannot pay me out. There's no possible way they'll cut the dividend, or there'll be another problem. So that's my risk. Is that correct?
that is absolutely true. Yeah, there's absolutely a
Okay.
risk there, right? So and the risk, and the way they mitigate that risk is through two vehicles that they use, or several vehicles. Well, one is they have a US cash reserve, and that US cash reserve you can see today, actually they depleted. It was at 2.25 billion. They've used some of it to pay off some of their debt because
Interesting.
balance look better. So they've dropped this has actually just happened this week. He took money from his reserve because he said, I don't need it right now. And he bought back some of the debt that they have, because you can see the debt. They have debt on their balance sheet. They're trying to clean up this debt, right? Because that makes his balance sheet look a lot better. So that's one vehicle. He can just take the reserve, the USD reserve cash, and you can see like they're actually tracking this in real time. Omar, this website updates, I think, every minute or something like that, or every 15 seconds or something crazy like that. Like you don't have to wait for quarterly results to see the data. Like it's right here. It's being updated in real time.
Right.
So they still have 6 months of dividend coverage. So let's say Bitcoin goes through a really nasty bear. Let's call it goes down to $10,000 and stays there for a time. Well, he's okay for 6 months. Okay,
Got
well,
it. Okay.
he can sell some of his shares to generate more, and then it becomes a little bit scary because now you're selling shares, right? You're creating your negative NNAV. You're going to go under, but it's an option he has. Plus, don't forget he has tons of Bitcoin. Like worst case scenario, he can sell some of the Bitcoin to cover the dividend. And think about it, like he has his debt obligations on STRC are you can see it. His annual dividend payments right here. It's right on the website. Their annual dividend obligations today is $1.7 billion. Okay, well, he's sitting on a $62 billion reserve of Bitcoin. I mean, he could literally, sell some of the Bitcoin and still be able to pay off the dividend for the next, what is it, 50 years.
Mm-hmm.
Now, again, fundamentally, you have to be convicted. Nobody's buying MSTR or digital credit if you're not convicted that Bitcoin is not going to zero. Go back to slide number 1, right? That's where I started this conversation, right? If you firmly believe like Bitcoin is going to zero, then hey, this presentation is information only, right? You're not interested in investing in any of this stuff, right? That's like foundational, right? But if you have some conviction and you think this thing has some upside and it's got some legs and you understand the story behind why Bitcoin could do well, then yeah, then these instruments are definitely for you. And I would say STRC is a very, very interesting sort of angle here that's new in the market. And I just want to introduce one more thing before I go into the next kind of digital credit instrument that's launched. Is you have to understand like the investable universe, right? And I think I've shown this before, but I just want to show this again, right? So there's a really good chart by Jesse Myers, who works for the Smarter Web Company. But he kind of captured where are all the global assets housed, like where are people invested, so equity markets, many of us are in there, a lot of us are in real estate markets, so there's a ton of money parked in those. There's about $1,000 trillion of global wealth, and most of it is in real estate. Surprise, surprise. A lot of it is in the bond market, significantly more than the equity markets, right? So that's why we always talk about bonds and interest rates and all that, because bond markets do move the equity markets. It's not the other way around, right? So, well, I guess maybe Omar, you know more about that, but I mean, bonds are a big market. Let's just put it that way.
They're the biggest market in the world.
It's almost as big as real estate. So Saylor, through these Michael Saylor, through the strategy, these digital credits, STRC, the digital credit instrument. The digital credit instrument is kind of targeting the money market funds. They're looking at money market funds. And what's the characteristics of money market, Omar?
Invest in very short-term treasuries, very short-term bonds, and the payouts are very minimal. It's just a way to hedge partially against inflation. To park your money, have lots of liquidity, and hedge against inflation to a certain extent.
Capital preservation, liquidity, and some sort of dividend payment. Those are the 3 characteristics. Okay, well, great. Well,
interest payment, not dividend, interest.
Interest, fair enough. Right. Yeah. It's an income, right? It's an income. So in the case of STRC, well, it's very similar, right? Like if STRC, his goal is to keep the price between $99 and $100. And remember, this thing launched late last year. So if I show you the stock chart, the stock price for STRC, let me go to just go to year to date. So STRC, here's $100, right? And you can see that, most of the time it has been very close to $100. It dips often below $100. Like this is, today it's just under 99. But this is an arbitrage opportunity. Somebody in the market is interested in buying this up because they know MicroStrategy's or Strategy's goal is to bring it back up to 100 right away. So there's like a spread there that you can capitalize on very quickly. So that's how it works. It pegs your price at 100. It's their goal is to always bring it back to 100. They want very, very little volatility, no correlation to Bitcoin. Doesn't matter what Bitcoin does. They don't care. This is not what you're invested here for. You're invested here for the yield, for the capital preservation, and the fact that, you have liquidity. There's a ton of liquidity in this market, right? You look at, I think they're trading something like average trading volume, right? $344 million a day. There's a lot of liquidity there. So you can easily get in and easily get out. And recently, just to this will be the last chart here, is Strive, another company. They work actually, Matt Cole is quite close to Michael Saylor, but they're following exactly the same strategy. And this is a wealth management company, by the way, their investment company. So they have Bitcoin in their balance sheet. They have a product called SATA, actually. I think that's how they say it, SATA. Exact same strategy, right? So their target price is to maintain it between 99 and 101. That's the trading range. And their goal is to basically pay you a 13% dividend. But here's the crazy part, right? So
13%. Wow, not a money
percent
market.
annually. And starting in June 16th, they're going to pay it daily.
Wow.
So Stretch today pays it so
Stretch being STRC.
STR, yes, STRC, thank you.
Yeah.
STRC pays 11.5% annually, and they are paying it at the moment. They're paying it monthly. They pay at the end of every month. They do have a vote right now. They have put it out to shareholders to say Strategy is proposing to pay semi-monthly dividends on STRC. So they will pay twice a month, right? So you put think of the scenario. You've got 100,000, you just sold a real estate property, right? You're waiting for the next property to buy. Okay, well, I want to park my money somewhere. Okay, well, I can put it into STRC. I can get paid twice a month at 11.5% annually. Or I can put it in SATA. And, again, assuming the management company here can maintain the price of 99 to $100, that's their target range. You could be able to get your capital out pretty quickly. There's a lot of liquidity, and you can get paid daily, right? While you wait. Now you find your next property, sell your SATA shares, get your capital back, plus of course the return on capital, and then reinvest that money. So it's an elegant way to get, and this is all Bitcoin backed products. These never existed before. These are literally, they just launched last year. And the interest in them has been phenomenal. Like if you go and, again, don't take it from me, just go look at, if I look at Stretch, and this is TradingView data, right? So if I look at Stretch, you look at it's a $54 billion ETF, right? Like this thing launched in June of last year. It's $54 billion already. Average trading volume, right? 3 million shares. That's shares, by the way, 3 million shares, right? So 3 million shares at $100 a pop, right? That's a lot of liquidity on a daily basis trading hands. The options market is starting to get interesting. SATA is the other one that's really, really interesting. Like the thing is like a bullet. Like look at it over the last week. It's flatlined at $100. So me putting my capital, I want some security that is going to stay there. I don't want to put my capital in here and see this thing trade down to $50 and then I lose half my capital. That's not what I want. So they're very, very incentivized to keep it really, really close to $100. So something to watch. I'm not suggesting that this is not without risks. It is absolutely with risks. It's new products. They're interesting. If they're going to actually pull this off and pay daily, 13% annually, paid daily. I mean, like you got any money sitting around, like this seems to be like a no-brainer, right? To at least give it take some, I'm suggesting put it all, take a little bit of money, put it in there, test it out. Because it's very easy to do. You have an IBKR account, you have access to SATA, just go buy the shares. And
Yeah,
you'll
but
see.
that's that. Yeah, it's not meant to be investment advice. It's your decision whether you'd like to invest in. But Steffi has a question here. This is a very lucrative and almost feels too good to be true. Can you repeat again why this? What is my risk to go into STRC or SATA? Like, why shouldn't I just put a significant chunk of my capital into them? It goes back to the same thing, Stephanie. So they're assuming a 30% average annual return. Okay, so if you're assuming that Bitcoin goes up by 30%, please, we'll see him elaborate on this. 30% growth, they're going to peel a chunk of that off and pay you at 11.5% or 13% in this, but in for SATA. But remember, if it goes down and stays down for a long time, they have a reserve, but that reserve will only last for so long. So if you reduce, yeah, let's take that down. We'll see what happens then. The
Yeah,
average
the
annual return.
cool thing is like they've actually given you an option to kind of model it yourself, right? Like, look, they're saying, look at my balance sheet, put in whatever ARR you think. Like even if Bitcoin's ARR it does not move, like it just stays at this price. They still have a significant holding on their balance sheet to pay off the dividend. So it's not to say they will be in trouble, but it will take many, many years. They still even if Bitcoin does not grow, right? They still have 36 BTC years of dividend. They still have enough Bitcoin on their balance sheet, even if Bitcoin does not change, like I'm saying, zero, like it just stays at 73,000 as of today, forever. They still have 36 years to pay off your dividend. Okay, well, that's one risk factor. The other risk factor is you don't trust this company, and that's absolutely like they're going to take your money and they just fold tomorrow. They could. I mean, that's certainly a risk, right? But again, like with a market cap of they're at $77 billion market cap today. Again, no, it's 56. Sorry, enterprise value 70. It's 56 billion market cap, right? So I mean, it's not a small company, and if the Bitcoin price pumps from here, you got to understand, like 843,000 Bitcoins, you're going to see a significant increase in their balance sheet. I think this is going to, this, I think MSTR, right? Because right now it's gone through an absolute miserable time. Like strategy is down like 80%, right? Since its high. So it's gone through a really miserable time, right? Since its peak. There's a peak back here, I think $450, right? It's like down 80% down to bottom here. So, but he's been buying MSTR, sorry, Bitcoin like crazy throughout this entire time. You can see it in their numbers, right? So you go over purchases again, you see their chart. He's been buying, Saylor's been buying, the company's been buying like crazy throughout 2024, 2025. And actually they're accelerating. So they're shoring up their balance sheet. Think of it this way. You have access to cheap money through the bank. You go buy land and real estate with it. Well, maybe the real estate market now is depressed, but at some point that real estate market is going to bounce back, and your balance sheet is going to be very strong when it does bounce back. This is kind of how this works. The other way to kind of think of risk here on these credit instruments is like an insurance company. So you have a policy, and this maybe we'll end on this note here, Omar. Right? You go and buy a policy from an insurance company. You pay a premium for that, right? So and you obviously get some sort of risk adjusted, something to protect you in the case of something bad happening. That's how insurance works. But what does the insurance company do with your money? So it's a different product. I recognize that, but the principle is the same. The insurance company takes your premium through the door. They don't need to pay you anything. They do if they have to. There's a situation that happens that requires them to pay off a particular incident or something. But if not, then they take your capital and what do they do with it? Well, they might have to pay other people that they have to pay off. So there's certainly some of that. But the rest that they don't use, they put on their balance sheet. They go and invest it. Insurance companies basically invest all your money. And all that money that they invest, they make money on. And that's how they make profits. So they don't necessarily make profits through their premiums. They make profits through investing your premiums on their balance sheet, investing that money, doing something with it, creating that capital return. So this is very similar as a strategy from an insurance perspective, comparing to an insurance company, because they're taking your money through the door. They're selling you STRC shares. They're taking your money. They're buying Bitcoin. That Bitcoin improves the balance sheet of strategy. Again, they're very convicted on Bitcoin going up. And through that improvement of the balance sheet, they pay you back some return, but they believe that the return on Bitcoin is far greater than the return they're paying you for your dividend. But again, your own research, right? It's certainly not without risks. They're new products. They just launched. Stretch launched June of last or July of last year. SATA started, I think, even sooner than that. I think it started. Let me just see. I think it was October or something last year. So these are new instruments. I'm not suggesting they're not without risk, but they are extremely interesting products. Any other questions, Omar?
Ivan's just a couple of comments here. Ivan, eventually these companies will lower the yield to pay. No? Yeah, eventually if they have to. If there's no growth on Bitcoin, they'll have to eventually lower it, yeah.
Yeah. I think the long-term game is for sure. Like I think once they've hit some sort of critical mass, they definitely don't know. They're doing 11.5% to attract capital through the door. They got your attention, right? Stephanie says, well, this is very interesting. Well, SATA is doing 13%, and then maybe. But there's not a lot of companies that can do this because you need to hold substantial amount of Bitcoin on your balance sheet to be able to offer these kinds of instruments. So if a small company comes to you and says, I want to offer you a preferred credit instrument, you got to ask yourself, like, look at their balance sheet. That's the biggest risk. Because if they're not able to pay the dividend and they have no way to kind of grow their balance sheet, then there's absolutely your capital is at risk. So you got to be careful of that.
Okay, yeah, I would sell my properties and put it on the side and stretch. Way better than dealing with all the tenant BS. Well, that's up to you, Ivan. You got to do your homework. But yeah, that's part of the reason people call it Ponzi, Peter Schiff.
Certainly an argument there, right? Because I mean, what's your cap rate on real estate? Like 5, 6, maybe you can get double digits if you're maybe not in Canada, but if you're really doing something phenomenal. But even then, like there's risk there. Here, arguably, the risk is less, right? Again, if you believe in Bitcoin going up forever. But we got to see. So far, so good. They have been the key word. Remember, strategy and SATA, both of them are very incentivized to do what? Keep the price at $100 and pay out the monthly dividend or semi-monthly, or in SATA's case, the daily dividend. Like if they don't pay the daily dividend or the monthly dividend, semi-monthly dividend, then I'm not interested in buying these products because that's why I'm in it anyway. And the other part of it is if they don't keep the price volatility relative to about 100, 100, so between 99 and 101, and it's a lot of fluctuation, then I'm going to worry about losing my capital over an extended period of time. And I'm not going to be interested in this. So they're very, very motivated to kind of meet those two requirements.
Okay. Anything else that you want to go over, Wasim?
No, that's all I had actually. So if there's any other questions, then yeah, just you know
That was
where.
a fantastic presentation, Wasim. Thank you so much.
No problem. Anytime. Yeah, and you know where to find us. So you got any questions on digital assets, on Bitcoin in particular? Yeah, you know how to find us. So just don't feel shy to poke anytime.
All right, guys. Thank you so much for joining us. And Wasim, thanks for shedding all this knowledge on us, information, and sharing your expertise. We greatly appreciate it. Everyone else, thank you for joining us. Have yourselves a fantastic weekend. Take care. Bye bye.
See you guys.